All right, let's jump into it. 11:30 on the 10th of December. So I'll start off a little bit different today. So sort of start off with metals because we've seen a couple of little interesting moves there. Firstly with gold. Look, we got the breakout yesterday, and that look, it was incredible price action through Asia yesterday. Big gap up on the open, wiped out the bottom, came up, cleared out the top, pulled back again, and then started to kick into gear and actually sort of ratchet up. And sort of obviously it's broken out of this larger range consolidation for now. Excuse me. Still work to be done, but basically it was. So I think the move was just buoyed on by the fact that sort of we had that headline over the weekend that China had started buying again. Because as I referenced on the weekend, or the weekend wrap or whatever I call it, where was it? I think it was 5 months ago. So somewhere back over here. Anyway, long story short, when we got the headline out that China had stopped buying, market went and absolutely fell very quickly. As I said, the timing of the headline was just before either CPI or FOMC or something like this, or maybe an NFP, I can't remember. But I remember sort of trading it with a mate at the time, and as it sort of dumped down, I'm like, okay, what's happening? Like something's just happened here. And again, with these sort of things, you take it with a grain of salt, but when you see things moving like $2 or $3 an hour, and then all of a sudden it moves like $25, you can tell something's happening, something's cooking. So it shows that the market is paying attention to this particular topic. It's not just a sort of like, oh, well, they're buying, they're not buying. And it's the same thing with India and silver. They're a massive buyer of silver. So if you see headlines in those areas, you've got to see the market react to it. And that's what we saw yesterday on the open. And it smashed into straight away, took out the lows, very much backing down, backing down. Silver was a bit more of a headache than gold was in terms of the sort of price action through Asia yesterday. But both of them led to their breakouts and that. And this is what I sort of say with them. If we see one moving up, we're going to see the other one dragged. Mainly sort of gold moving up, dragging silver. But we're getting at the same time, we're getting the gold silver ratio break to the downside, which is obviously showing that silver, as I've said a couple of times, will outperform gold in these sort of markets. So through this little falling resistance we had, this little triangle we put it together on the weekend, it did pretty much stop exactly where we thought. So this is the little sliding scale that I was on that sort of like, yeah, when we were going to come into contact with this falling resistance, we were going to get exactly that, a bit of a sell-off and that. And that's fine. We saw this happen. It happened on point, and this is what you want with a structure, with the sort of price action. You want a reason for why these things fall back, and that, like we hit our price targets, they fall back. We hit resistance levels, they fall back. Not just they arbitrarily just drop out of the middle of nowhere. That more signifies the idea that there's something more to it, some sort of underlying issue, and whoever's sort of moving that market is actually sort of getting out just at whatever cost. So in this sort of sense, you can see that, here's falling resistance from our all-time highs to the first recovery move, which gave us that sort of big move up through here, back down again, third touch of this one. So what we're getting from this is really starting to, cement this falling resistance, like, a couple of bucks or $1 or $2 either way. Maybe it's not perfectly up the top up here, but point's still the same. It's sort of like, we're talking 75 to 77, 78, whatever. It's $2, $3. This sort of means that basically this is a line that the market's obviously working off as well, and that's what we can use to sort of trade. So now we've got a little bit of a back test of this previous area where we've sort of seen, market likes to sell it. This is the level that we were sort of trying to really hold last week. Hence why I think originally I had this little one up, I think over here or somewhere around the zone over here. Because I thought, oh, here we go, we're going to move. And I said, even at the time, I'm like, look, 60 is the level we need to hold, level to beat. It tried to hold, and obviously, bang, you could tell what happened there. It sort of fell and broke down and back into this continual back to sort of basically continue this little range through here. So where we are now is like, obviously, we've got the breakout, we've got the back test. Again, 60, that's in the spotlight. We want to sort of see 60 get held, and we want to see these buyers really continue this push up through this breakout level here. If we can get above yesterday's highs, or overnight's highs, above that, say, 63, call it 63.70 just to be on the safe side, you are going to run into a little bit ahead of, it's not a massive level, but it is a level here at 85. So we would expect a little bit of a pushback here. So a course of action with this kind of thing would be, if we can get a break here, take out the highs, expect a little bit of a pushback here, retest here at those overnight highs in confluence with, maybe the top side of this falling resistance through here, break out above 85, and I think that's it, and then we're on our way. And then we're sort of looking back up to, most likely, I would say you'd see back over 27 through this point. So let's just put a little alert here. So I'll probably run out of alerts. High through falling resistance, and that price target. Look, let's say sort of 27. 27.15 to be sort of safe. I mean, 2700, the round number, of course. 27.15. Make sure that we get in a little bit earlier. Then you don't have to pull the very, very top of these sort of things. It's sometimes better to have your price target, a buck or two under, just to make sure that if it does come up and just clip that little level on that and fall back, boom, well, you'll get sort of taken out with it all. So that's why we sort of have these price targets here. Perfect example of this trade that we had sort of the other week, sort of through here, coming up, coming up, coming up. Price target into this level over here. There was a measured move onto this one as well, but you can see that this is obviously the area where we expected market to react from. Buyers, buyers, buyers. They try to hold here. Well, what is the market going to do? They're going to sell it from there. I mean, it's not a sort of rocket science, but you have your price target early, you definitely get taken out. And then we looked for this move back, and then of course that's what we got. So it is looking fairly constructive at the moment. Obviously, work needs to be done. DXY did have a couple of little runs at moving lower yesterday, but of course, as it has been doing, the fanboys stepped in and rallied it into the close of the US session. We've got CPI coming out this week. That could be a catalyst for another move if we don't get something a little bit sooner. So potential to just maybe sort of consolidate this area up here. A break back down below, I wouldn't want to be going much lower than 26.46. Probably a retest of this falling resistance through here. Get back below here, this turns into a bit of a failed breakout, potentially back to the range, but also opens you up for potentially a move out the bottom side. Of course, remember, it's better with things in ranges, it's better to reject from the top of the range than it is to attempt to break out and fail, because that can then lead to obviously a big break in the other direction. So yeah, if we get this move through here, another sort of thing I've got for this move is obviously this little range measured move, which also comes in around 27, 27.15, 27.16. Depending where you want to call the exact top of your range, but these are the highs. That's your breakout back test. Anyway, in that sort of vicinity. So this is the kind of area. Let's move this back and move this over here. This is the kind of area that we'll be targeting. And look, you know what I mean. It doesn't mean that it's necessarily. I mean, none of this is guaranteed. It doesn't mean it's going to get there. It doesn't mean if it gets there, it's going to stop there. But you can guarantee you're going to see some reaction at this level. It held it, held it, held it, held it. It rejected it. If had it come back at it really quickly, might have weakened it a bit. I would say this is a decent area where you're going to see a rejection, you're going to see a move back down, and then it's vital then to sort of see, okay, where does that move back down come to? Where do the buyers, how hungry are the buyers? The buyers are moving up and moving up and moving up, and they don't allow it to come back down too much, and then sort of re-attack that level sooner rather than later, basically. There's a good chance that you'll pop through with that. But, first things first, get up to there, touch it, see your move down, see the rally, see if buyers are going to step in early, and then sort of push it back up there. So that's the broader view, but I think sort of at the moment, we got the breakout, we got the back test, see if this holds. In the short term, I mean, back above, we had a little wick on the open here, up to 63. So, 63 and 74, they're the kind of levels that I'm looking for a little bit of interest here at the moment. Silver, got the breakout finally. Chart's starting to look a little bit messy, but the point is with this one, I'll put actually another cleaner chart on X. If we look at this sort of whole move through here, we've got a couple of moves. We've got one move here, two, highs, lows, highs, lows. Each one of these moves, as you can see with the fib, has come back to, that's your low there, 61%. This is your new low, your new high, 61%. It's your new low, your new high, comes back, 61%. Yeah. So it showed that this is obviously, they're trying to really sort of dump it down, and the buyers are still pushing up, and moving forward with it. So as it is at the moment, 3150, that was the crucial level to get the breakout. We've seen watching this the whole way through this area here. It's the double bottom, it's the range, it's the breakout, it's the weekly breakout. You can see how hungry they were. They were just tapping into it constantly on Friday. And obviously yesterday we saw this big break here. So it's held this sort of rising support through here. At the moment, you've got your breakout and the retest. The buyers have stepped up and they're jumping in at 38%. To me, this means that they're hungry. They're hungry for the breakout. They're hungry for the continuation because they're not waiting for this to come back here. Structurally, you could see this coming back and retest this level here. A couple of reasons. One is that it's at the 61%, and we've seen 61%, 61%, 61% a couple of times over. So it would stand to reason that, if it came back down here, you'd probably see a reaction here because remember, they were defending this line so strong, so short, 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 short. All their stops fueled this move up over the top over here. There's still some people holding in hope. Come down here. Once we get to retest this level, they'll sort of go, look, I'm happy to get out for flat, and I'll reset. And that'll give us another push back up over the top over here. But as it is at the moment, you've seen that the buyers are like, we're not going to wait down here. If you think price is going up, firstly to our price target, 3280 to 3300 or 3300, whatever, it doesn't really matter whether you buy here, like, you know what I mean? It's going here. So you don't want to miss the boat, and that's why they step up a little bit early, particularly if you think you're getting your sort of weekly breakout, which is this level. Excuse me. Which we've seen again. Pullback, 61% or thereabouts. Pullback, 61%. Breakout of the weekly. So if you think that this is the play and you think it's going to 37, which, structurally on this, potentially it could. I mean, that's the top of a wedge, is a 3 drive to the highs. RSI is looking a little bit, looking pretty good here. We're down to the oversold, starting to tip over. You want to see a strong close to the week to sort of solidify this move and obviously get that RSI to turn up. But if you think it's going up to sort of 35 to 36 or 37, you know what I mean? A couple of cents here and there aren't really the end of the world. And that's why you're seeing buyers sort of step up a little bit quicker, because that was such a crucial sort of breakout level. They're happy to buy it here. They're not waiting for these deep pullbacks. The deep pullbacks were levels of uncertainty before we got that actual range breakout. We've got the range breakout. It hit back exactly where we had it marked. Like, there's no sort of rocket science to this sort of stuff. It's just the same stuff over and over again. This was a big level coming back in September that led to a big breakout to go up to 13-year highs. So, they were going to defend this very strongly. As you can see through this area here, they tried to hold it as support a couple of times, big breakthrough, bounce back up, and then finally succumb to it. So it's no surprise that once you come up to this level here, that they're going to be there. The sellers are going to be there again. You know what I mean? You can see that they've loved to sell it at this area. They've done it again. An interesting thing with silver, maybe I put it on a different time frame, I can't tell, is this kind of repeat action when it does come to these breakouts. I was actually pointing this out on the weekend as well, that you get these sort of moves here where you've got your sort of level, your flat level of sellers, bang, 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 and it's each time it comes down, wipes a bit more, comes up. So actually, here's the first pullback, tests through, comes back, lower than that one, clears out any sort of longs, tests the level again, down the bottom, tests the level again, bang, and breaks through. Because how it's relevant is you can see these things, they move exactly the same. And this is why it's important, I reckon, to sort of only trade, not trade everything under the sun, because you pick up these little nuances. And this is what we sort of called out sort of through the weekend. Here's your flat line here. This is where the sellers are. Each time coming back down, coming back down, coming back down, and then eventually bang, it pops through and breaks through. So very interesting sort of price action at the moment. I think if we could sort of take out this level at 32.20, I think that's a pretty straight shot through to, as I said, 32.80 to 3300. That's your measured move price target. It's the double bottom, it's the range, it's the breakout, it's the wedge from back here. There's the daily resistance levels over here. It's 32.80 up to sort of 33. So I would say this is a reasonable area for your price target. Should we take out overnight highs? That seems like a fairly decent area where you'd sort of see a little bit of profit taking. Should we sort of get up to that level there as well? Obviously, we just got to see sort of what's happening with DXY here. But at the moment, buyers are stepping up. They're seeming to hold this little roll up here. Where we are at 11:47. So I expect to see probably a little bit of sort of volume in the next sort of like half an hour, 45 minutes or so, which might actually feed into this, or break these lows, and as I said, we know where we'll probably want to have another shot back down at this retest, possibly at the 61%, 31.40 to 31.50. Move along, we've got Aussie, big one for today for them because we've got the RBA. Look, RBA, technically the only hawkish central bank, but of course we had that super weak GDP numbers. So there's a bit of a mixed bag of stuff at the moment. Weak GDP numbers will be mentioned. So the press conference is going to be the big one today. They're saying 44 out of 44, so 100% of the economists are saying that it's going to be a hold. These things can make you cautious because one of the biggest trades I've had was in this instance when they were saying that they were going to hold a couple of years ago, and they hiked. And everybody was saying they were going to hold. I think it was 100% of the people. I mean, I thought, well, that creates a great opportunity. So I am a little bit cautious with these things when they do say, 100%, because the shock trade to the other side is just so attractive, basically. But we'll see how we go. I mean, look, the criteria hasn't been met from what Bullock said herself. She said they want quarterly CPI figures in the band or their target, and they haven't got one. So one being will be this. So will be, I think it was February, possibly. Yeah, I'm pretty sure January, February, maybe January. They don't report. February, and the other one being sort of maybe April or so. So you haven't got one of the two yet. So yeah, look, I would say it's a pretty certainty, and I've been very much in the camp of it's going to be a hold through to the end of the year. They weren't going to be sort of cutting. So let's get this out of the way. So look, most likely we are going to see that. So I think the interesting sort of thing is going to be the press conference to see how dovish they've turned, how much they sort of go, hey, look, you know what, we need to really keep an eye on these figures, and maybe drastic measures need to be taken. That's the kind of stuff that's going to weigh on Aussie. And as you can see, market's cooling off a little bit into the start of this session. We did have a bit of data out a moment ago, which was quite weak. It was the consumer confidence, previously at 5, now coming in at -3. So, I mean, it's not painting a great picture, but again, these sort of things are, it's not the big high tier bits of data. And obviously, sort of, it's something that they do need to take into consideration. We did get the big push yesterday, basically off the idea that there was a bit more stimulus. And this is the thing with Aussie. You've got a couple of pillars that it needs. I mean, all currencies, all things need a nice sort of couple of things to line up for them to have to actually sort of get them moving. One of Aussie is China, obviously, because export is a big thing for us, and China is the biggest buyer. So if they're doing good, if they've got a little bit of cash to throw around, well, we're going to see more manufacturing. We saw this with copper. Copper exploded as that data came out, and Aussie got a pump up about it because they were like, yeah, sweet, you know what I mean? They're going to be buying some stuff. So look, it's not that's it, and Aussie's okay, but it is one of the pillars that could potentially get it to have a bit more of a sustained move to the top side of these supports. So we did find support fairly strong at this level here. So we got big rising support coming through here. So just so we can go back even further. No, not really. So we got 4 touches through this area here. We got a confluence of this sort of horizontal support coming through here, and then you had that perfectly timed China headline at the same time. We've also seen a little bit, it's really sort of itching with this one at the moment, but it's still trying to sort of really confirm a bit of this negative divergence through this area. We actually drag this through here. We've got a little bit of a wedge playing out as well. And we've got obviously this channel through here. So that pretty much fits in with this sort of thing here. So you can say, look, that's our channel. That's our kind of wedge through this area here, negative divergence coming off the supports. If you were to get a breakout, this is forward thinking, of course, that's an area which we'd be probably interested to have our price targets. So, yeah, look, work to be done. Through this falling resistance is the first area you need to get through. Through the falling resistance, this is top side, of course, only, but through the falling resistance, through the swing high, this area over here, and then, of course, you know, if you're going to see a more sustained recovery, through post-election highs, which is this level over here. I've done this a few times, call it the pie in the sky, measure move price targets for Aussie, and in the past they have actually worked. So it comes in very much in those previous highs up over here as well. There are your 2 set of price targets potentially for a breakthrough here. Larger wedge, smaller wedge, slash range break up until this previous swing sort of support area potentially through here. And then, yeah, if they really get onto it and all the ducks line up and we see a big sell off on the US dollar, then you know up at 68, but you know not holding the breath for this one over here. But I think certainly, look, if we do get a little bit more of sort of a continued sort of hawkish rhetoric from Bullock, and if we see sort of US dollar sell off a little bit, and we see metals continue to sort of push up a bit higher, if all these things line up and like you know actually people sort of really sort of push along with the stronger yuan, then you know sort of stronger Chinese economy, which in turn, not in turn actually, because it's funny actually, I was just going on a tangent here. They're offering stimulus basically, which you know in normal sort of surroundings would weaken a currency. I mean, like your economy isn't automatically 100 billion, and this is just picking a random number, your economy isn't automatically $100 billion more valuable just because you print $100 billion or 100 trillion yuan more. No, each individual dollar yuan is worth less, and that's why your currency depreciates, goes down. But in this instance, what they're sort of kind of doing is trying to sort of basically pump money into the economy, which makes it seem a little bit more attractive to do business with them, gives some more people more trust, maybe some more international trade, and those higher figures, and then getting back to a level of stability is what's making it look a little bit more attractive. So this is why it's interesting. And it's one thing I sort of love. Actually, no, I was going to say love hate, but no, I do. I love about this sort of game is that you know you can have the same data 6 months apart, or even in this case at the same time, coming from different sort of economies, and they can yield very different responses. So you always need to be on your game with it all, and you know, be considering you know both sides of the coin with it all. But yeah, certainly at the moment, the market loves the idea of a bit of sort of China stimulus. but I think at the same time, people are still very cautious. It's got to be tough because really, China has got a horrible reputation. And so very low trust in them actually sticking to their word, or even not even necessarily sticking to the word, being able to achieve what they want to sort of set out to do and set out to say they're going to be able to achieve. So anyway, that's a bit of a tangent, but if we can see that continued thing happening, we see USD selling off, we see a hawkish RBA. Well, these are price targets, well at least sort of 63, mid 63s, definitely something that could be achievable. I think actually if I have a look back on the weekly, where was it? End of last year, 24. This was December last year. So it's the same sort of setup. And look, I'm not saying that we're going to see the same thing here, but of course, its difference was we were coming into it bullish. But first week of December, we saw a decent sort of sell down here. Down 2.5% from the highs to the lows. This week, we were down 2.17% from the highs to the lows. If you could get something to get you up here, there's no reason you can't see a rally into the end of the year. Maybe it gets smashed back down afterwards. Maybe it hits that. I mean, that would line up perfectly with going a little bit above the zone, go right up here, screech up here, hit our price targets, and then maybe sell off into the January kind of period, maybe when Trump sort of comes on board. This is just forward thinking with it all. I mean, at the moment, we're still really down at the lows, but as you can see on a weekly, support areas all over the shop. We're oversold, moving through here. Lower, not full, low, actually lower time zone, time frame. We've got negative divergence, trying to hold into this area. This is the thing, for a negative divergence to work, we obviously saw this negative divergence through this area here. And it's continued to push up with the buying, but prices continue to come down. So you need to obviously not only just have the negative divergence, but you need to put in the higher high to then for it to really pick up steam and start continuing out to the other side of it all. And that's what I'm saying. If you do get up above these levels, get out of this falling channel, that's what could start to spur this on. You got the RSI to sort of continue back up to 80, 85 or so. That could carry Aussie back up to these 65, 50, 66 kind of levels. All right, so that's a bigger view there. Smaller thing here is basically, obviously, we're seeing a bit of a sell down from overnight highs, pretty much in line with the top side of that channel. So it's not a complete shocker with that. Get rid of this one. You want to sort of see it rally somewhere through this area. If we drag, this one here. Yeah, look, downside here about 64.20. I wouldn't want to see it drop too much below this. You can see obviously on the way up, it was a little stopping point. We've seen it be a little bit of support through here. This is an area in which I think, okay, if you're going to get a rally, you want to rally before here. If you get down under 64.20, it's a pretty straight shot straight down here. And as you can see, the market hasn't really thought too much about it most recently under that level. So if it goes down under here, you're coming back to test 64, which is obviously just a pretty weak thing for the Aussie, because obviously we had this nice big breakout yesterday, well, breakout off the lows, recovery move, took out all these highs, and if it just dribbles back down over here, I think that's a sign that there's probably still some rot in the core with the Aussie. Flip along, we got DXY, and it's broken up a little bit here. So this is the area. I traded this one last night actually, which worked quite well around that. Obviously with the Aussie breaking, breaking a little bit higher, metals breaking out as well. Had a little retest here. It managed to rally from 3 o'clock in the morning. It's just been pretty much a straight shot back up over here. So I think, look, if it gets back above these highs over here, this 106.24, this is probably where we're sort of looking at next, at little mid-range of that potential area here. what it's doing here is you've got your range, you've got your breakdown. It's tried to retest a couple of times. You want to see it actually commit to this downside over here. This big wick down the bottom here, that's where we're looking at 105.40. Underneath that, that's confirmation of the bigger sort of head and shoulders, albeit a bit wonky, very wonky. Update this a little bit. Head and shoulders through this area over here. You still need to get down underneath these zones here. Still maintaining the election gap as the price target. But obviously, look, this is what DXY does when it turns around. It looks like it's doing okay, and then it just continually tends to sort of just pack it in. Rally back up out of nowhere. Those fanboys are crazy. So yeah, I think for the moment, look back down under this zone here is kind of where you want to see it sort of reject from. Um, what we got? We got CPI tomorrow. CPI expected to come in a little bit higher, so that would obviously be a little bit more sort of bullish for DXY. So maybe this is why we're seeing a little bit of a push up and not really commit to these downsides over here. If you do get a weaker CPI, I think that'll be the driver for them to get to the bottom side. Okay, copper, solar breakout. And this is what I was saying yesterday. Actually, two parts of this. One, we had the move on Friday. Then we got that sort of inflation expectation data, which moved back down here. I did say that sort of this is the area coming back down here. It could be seen as sort of like failed breakout, but to me that was because that was more data driven, or a little bit of headline data driven, data driven. It didn't really count so much as a sort of like normal, okay, breakout. Oh no, actually sellers are moving in. It was just a change to the landscape. It was the end of a Friday, end of the week. You had a little bit of sort of stronger US dollar data, and obviously bang, sold it back down. But I didn't see this as breaking and coming back down to the bottom side over here as per the video. And of course, yesterday when we heard that China data, this is the move out the top side here. And this is what I'm saying. These are the pillars for Aussie. Is stronger copper, because obviously copper is a large metal used in sort of manufacturing. And obviously that's going to be better for China, better for Aussie, that kind of thing. So, this is why you see it move, Aussie move with copper as well. A stronger copper does sort of weigh or factor into Aussie. We did see a sell down, same as this tiny little spike on the way down here. So, a little bit of a reason there. Not massive level by any means to have it knocked back. But I think the fact that you got through this level over here, which seems a little bit stronger, obviously that was the post-election swing. And obviously they tried to hold it a little bit on the way down. I think the fact that it's popped through here shows an absence of the sellers. Yes, they did sort of jump back in here. So a higher high through here, we'll see confirmation for next move up, and next move up would be looking at this level over here at 103, dyslexia, 435, 435 on a break of 430. All right, finally just stick across with China. Slowly grinding this way. Obviously, you can see they're putting in heavy work with those fixings and that each day. So they're really not letting up from it. Ever since we had that sort of test up here into that resistance area, and they put those fixings on down at these levels, they haven't let off. And it's slowly weighing on it, but, it is not quite giving up as of yet. Really, you want to see underneath this level over here. Get under get under these lows. I don't know what's going on here. These lows through here, which are basically your swing lows of this wedge, then you look for your wedge price target, which is back down over here. This is another one of the pillars for Aussie. If you do see this start to sort of weaken and sell down, obviously at the moment it's definitely not doing that. It's very much holding near the highs and very shallow pullbacks. But if we do see a bit of a move to sort of, complete this sort of little wedge or big wedge through here, into the end of the year, then I would say that that's going to be something that's going to sort of reflect in the Aussie as well, looking a little bit stronger. So yeah, first things first, take out those lows of this drop down here, but really underneath 723 is where you want to see it, and then you're looking down at 713, which is quite a massive, quite a big drop off for the one. All right, so I think that's pretty much it with it all. Just on DXY finally. Yeah, so we are seeing that sort of push back up, but just have a quick look on the daily. Oops. Yeah, it's certainly not coming down easily. Um, you'd want to see this area hold for sellers. It is pretty oversold, and we have seen a little bit of a drag up off the lows here. So you want to see a continued move down to the top side. If you get above this, what I've called the right shoulder over here, 106.86, then this kind of negates this whole move. But as it is at the moment, you've got a little bit of a retest coming to the underside of this second range. So we had that first break, retest, underneath, retest. That's still the lows from Friday is where you want to see it sort of break underneath. All right, quickly with the data, we do have a bit of China data out at some stage today. Where are we at? Tentative trade balance. See if it hasn't come out yet. No. So looking to tick down a little bit. So looking to tick up here, trade balance, but US denominated trade balance looking to move down. Possibly looking to settle in a different currency. I'm not quite sure. There's a lot of talk of that. I mean, I know BRICS isn't out yet, but there's a lot of talk of that sort of like, the efforts to do that kind of stuff. So, interesting. See how this sort of one plays out. Stronger, obviously, better for one in this case. Big one is RBA, 2:30. So what are we at? Just over 2.5 or just under 2.5 hours now. Press conference an hour after. The press conference, I mean, it's something to pay attention to, definitely, because obviously that's going to give us more insight. That'll probably move things a little bit more this month than it has previously, but it's certainly not like you don't get the price action like you do when you hear the Fed talk or Powell talk. Through the rest of it, nothing really, really of note. No major sort of stuff there, and as of course we got. Not much on the docket for tomorrow either. And then Thursday, or actually Wednesday night, local time, Thursday, super early morning, kind of midnight, you got CPI. And this is what is probably holding US dollar up a little bit at the moment. It's a tick up. And of course, if this comes in lower, well, you're going to see that sell off. But if this does come in line or even a little bit hotter, it gives reason to sort of, maintain US dollar a little bit stronger for the time being. All right, that's it from me.